Hey everybody, happy Monday. Why are we having a show on a Monday? This is a hazy mystery, but we're having a show on a Monday. It's PDAC Monday, and my co-host today is Carrie Howes. Carrie, how are you?
Hi, well, thank you. How are you?
Good. You were down at the PDAC today.
Yes, it's been great.
Was it good?
Yes. Apparently, a lot busier than it was yesterday and last year.
Really?
Yeah.
And is there any coronavirus around?
No, everybody's elbowing.
Really?
Yeah.
Not
no
shaking hands?
handshaking. No,
really?
Lots of gloves.
That's got to be weird.
Yeah.
Huh, and I'm sure there's Purell stations everywhere.
Everywhere.
And there must be lots of people wiping stuff down everywhere you go.
Yeah. It's a little unnerving when you hear somebody cough. But.
Yeah, no doubt, no doubt. It's taken on a whole new meaning. So is the conference then, would you consider it well attended or packed, or like where is it relative?
Today, as on a Monday, I think it's fairly well attended.
Oh, okay.
Yeah.
Great. So not like record breaker like previous years.
I think last year was the quietest year that I had seen in some time, but this year, apparently yesterday was not very busy, and today is possibly the busiest day. We'll see. Between today and tomorrow, we'll gauge that.
Did you go to any good events?
I will be tonight. Yes.
Oh, tonight's the night.
Yeah.
Well, so will I. Today on the show, we have Wayne Tisdale. He's president and CEO of Canadian Palladium. We have Carrie Howes, of course, from Rayleigh Capital as our co-host. And Paul Gill is here from Lomiko Metals, possibly one of the most long-suffering CEOs in the mining industry. And all that's coming up. But here's Wayne Tisdale. Wayne Tisdale joins me now. He's the CEO of Canadian Palladium. Wayne, welcome.
Morning.
Wayne, let's start with an overview. What's Canadian Palladium all about?
Well, it's a company trades on the CSE under the symbol BULL. We have a palladium project in 90 kilometers west of Sudbury.
Right.
And it's called the East Bull region.
Saw the press release this morning.
It was very good.
Yeah, it was fantastic. I didn't realize that there were deposits that could generate 7 grams per ton of palladium.
Yeah, there is. This one's a very unique one. It's it has a resource on it of 523,000 ounces, and we raised the money. I think the third week of January, and we were drill permitted, so we got one rig running now.
Sure.
And this deposit is unique. It's an open pit. Comes to surface. It dips at about 45 degrees, which is a very good stripping ratio. And it has only been drilled for these resources to 110 meters deep. So what we're doing is going underneath it, and we're drilling it, and we're adding to the resource. So we hope to double that in the next few months. And we're putting our second rig on here in 2 weeks, and we'll carry on. The goal is to come up with about 1.5 million ounces.
So this deposit is in Sudbury, Ontario?
It's outside of Sudbury, 90 miles. So the purpose of is to drill this off. This does not have a big capex on it. This will become a quarry, and we will then use a road construction company to mine it. Basically, pick it and quarry. We crush it and ship it to Sudbury.
That's really interesting. So how long have you been working on the project now? How much further do you have to go, do you think, do you get to 1.5 million ounces?
We've had the project a year, and I think we'll have to work probably till June with 2 rigs to get to that resource we're looking for.
Wow. Okay, so let's talk a bit about palladium. What's driving palladium? It's gone up 25% just since the beginning of 2020.
I think it's the shortage of palladium in the world, and of course China's increased their emissions another 30%, which draws hard on the palladium. There's the reason South Africa has got a power shortage, and so therefore they have a little bit of a wobble in their mining. And you saw North American Palladium being bought out for $1 billion, which is one of the best deals that anybody's ever done.
Sure.
And then you got Norilsk that's probably gone through their whole reserve. So there's just a huge shortage of the product.
Sure. It's pretty rare to have a deposit that is primary palladium, is it not?
Yeah, we have an equivalent. We have other minerals. We got copper, nickel, and gold in there. But the pure palladium we drilled was very, very, very good.
Right.
Yes, yeah.
Okay, so there's a shortage of supply and probably a shortage of quality deposits left?
Yes. Well, there could be a lot of quality department. The difference between us and everybody else is, again, we come back to the CapEx and the easy exploration. We're right alongside the highway. Mm-hmm. It's a numbered highway. We just drive off and we drill it.
Wow.
And it's a very easy access is the whole thing to it.
Oh, that's fantastic. Then who would be a potential takeout?
Oh, there's lots of them around. I don't know. Richard Sutcliffe is helping us. He said he could find the goal is to be able to sell this in the ground,
Right.
per ounce, and then move on.
Right. So this is one of those quick and dirty mining plays.
This is another U.S. cobalt.
Yeah. Right. Okay.
Yeah.
So let's talk about your history in the mining space. You've had multiple successes over the years.
I've had a few.
Yeah.
Well, I've had the opportunity to participate with the team. Yeah.
Sure.
So yeah, we had Rainy River was a big one. Nelson Baker and I and our team started that.
Sure. Rainy River was sold to New Gold.
Yep.
For how much?
400 and some million.
Yeah. Right. Yeah. Okay. And then some of the other ones.
Well, we had U.S. Cobalt, which was very good. We also had, if you step out in the oil and gas, we were the first people to take on the Bocking play in Saskatchewan and sold that to Crescent Point.
Wow.
And that was a good project.
Sure. So there's not a lot of competition then in the palladium space for investor dollars at this point.
Yeah, there's quite a few good companies out there. Yeah, they're coming back. New Generation is a great company. A lot of exploration. We're a little different on the exploration side because we don't have a big. It's a straight drill job is what it is. So we don't have to do much more than that. We outlined it with a little geophysics last year, found our targets were good and strong, and so we're just drilling underneath the target, underneath the structure.
Sure.
Find more.
Is in your opinion, is it likely that palladium continues to rise in price?
I don't know. They're talking $3,500 an ounce. That seems high, but in this range, it's amazing. I mean, this is very, very profitable.
Sure.
Okay.
It sounds really, really promising. And recently we received communication from the BCSC that if we were going to talk about the good, we had to talk about the bad. So where are the risk factors in this project?
I guess the risk factors is that we wouldn't find the 1.5 million ounces. That's the big risk.
That's a big risk.
Yeah, we miss in all holes. It hasn't happened yet, but
sure.
We could.
Price of palladium could collapse back to $700.
It could. I don't think so, but we could do all that. We have to give both sides of the story.
Yeah, exactly. Okay, so then in terms of the precious metal complex, then palladium is a lesser known than gold and silver,
yes.
Obviously,
yeah.
But is the best price performer in the group.
Mm-hmm.
Why is palladium, in your opinion, so underappreciated?
Palladium, I think it is appreciated.
Okay.
It is by the market today. I mean, we got a huge market in it. Again, there's a shortage. They say there's a 1 million ounce short on the where we sit today. I mean, when they start stealing catalytic converters, even in Calgary, they're stealing them, and they're getting $1,000 for a catalytic converter.
Really, just for the content of the palladium?
For the palladium, yeah. So they take it to a junkyard, and then they ship it off.
So there's $1,000 worth of palladium in every catalytic converter?
Mostly, yes.
And every car has a catalytic?
Mostly in the hybrids, for sure.
Uh-huh.
Yeah.
Well, very good. So who else is involved? Who's driving the exploration in this?
Gary Clark's. He's the head of the Ontario Prospectors Association. He was the first guy to write the report for this in Rainy River. So we've worked with Gary for a long time, and he's a partner, and he's got a great team. And,
wow.
Yeah, he's done a lot.
Fantastic. All right, Wayne. Well, that's a great introduction. We'll leave it there and come back to you soon. Thanks for joining me today.
Okay.
Hi, we're back. I can't believe it. There's 4 people watching. What's going on with this? Is this thing working? I don't know. Do you have any palladium intel investments? Do you know any palladium deals?
Not on my book at the moment, but I know of some.
Does like most people don't really know that much about palladium, do they?
No, I mean I think it's in favor.
Yeah.
But I don't have a lot of intel on palladium itself now.
Even mining investors are not necessarily up on palladium so much.
Yes.
Like it's really specialized. Anyways, coming up next here we have Paul Gill. He's the CEO of Lomiko Metals. Paul Gill joins me now. He's the CEO of Lomiko Metals. Paul, welcome.
Thanks, James. Thanks for having me on.
Paul, Lomiko has been around and you've been slugging it out for years. I got to say that I think you're one of the most tenacious CEOs in the mining industry. Let's start with an update. Where are you at with Lomiko?
Well, yeah, thanks, James. We've been here for a while, and we've been looking at that right property for development. And what we found right now is a property in Quebec called La Lutte. It's been 3 years that we've been drilling it, so we've actually got 170 drill holes into it. One resource done in 2016, and the next one it's coming up right now, and I think that's the one we'll take to preliminary economic assessment.
Okay, great. Now, what's the status of graphite in the global marketplace currently?
Yeah, it's been a very rough ride for graphite. We've seen ups and downs. We know that Syrah Resources started producing, and they overproduced, and they really brought the price down. They were selling it for quite cheap, and so that wasn't a good market to go public in or to really talk about graphite, and things dried up. But I think now what we're seeing is Syrah's pulled back on production. Now a lot of stuff in China is sucking up most of the graphite production, and we are in a situation in North America. We have a critical metals agreement in which supplies will be taken first out of North America rather than other places. So we'll have tariff barriers in place, allow us to develop those kind of metals here in Canada and the U.S.
So Donald Trump worked out for you.
Well, he sure did. You know, after all those nasty things I might have said about him and his hair, he has actually done some really good things for the economy. And I think this specific one is very important because for Canada specifically, because we're able to create a barrier against cheap product coming in from other countries. And it's also about security of supply because what happens in China or Africa and other places, they overproduce and then they dump onto the North American market. We don't want that. What we want to have is a homegrown solution for the electric vehicle market and other strategic markets like the defense metals and stuff like that. That's what this is all about. Let's make sure that we have the supply of material when we need it.
Okay, so who would be the biggest consumer of graphite from La Lutte?
Well, right now what we're looking at is a number of different groups, and one of the ones that's really interesting is of course Tesla, that has battery factories in various locations in North America. Volkswagen is thinking of developing one, and I'm pretty sure there's going to be one based in Ontario or Quebec fairly soon. And I think that is just required because when you think about it, 1 million Teslas on the road today will require 100,000 tons of material. So for every million Teslas on the road or electric vehicles on the road, you're going to need 100,000 tons. So that adds up very quickly. The other fact that's very important is that material is spherical graphite. And in order to create spherical graphite, you need 300,000 tons of flake graphite, and then some of that is destroyed in the process to create the flake, or to create the spherical graphite. So it's very important to know that, and multiple mines are required. So we have 3 or 4 that are going strong towards production in Canada, but there's also one in Alaska that'll be required, and several others potentially in the United States.
So I guess I'm going to have to wait a little longer for my Tesla truck that I ordered a few months ago.
No, that's on the way. Because there still is synthetic graphite that is used in the process of making those anodes. But I think it's kind of ironic that they're using that material because that's used from coal or bitumen burnt to a crisp and turned to carbon black and then converted to spherical graphite. And it's a very time-consuming and also cost-intensive and energy-intensive way of making this particular material. If we can take natural flake graphite, roll that, what happens is you create 2 products. One is a spherical graphite, and then the fines that are created, the dust that's created, also can be used as lubricant. So you get a win-win. So that's the benefit for that particular product, and I think we can really beat prices from the synthetic side with natural flake graphite, which is a lot less costly.
Okay, great. And so in the current environment in capital markets, are you finding that there's interest in participating in the debt structures that you mentioned you are using to drive the development forward?
Yeah, I think that right now what we're seeing is large institutions getting involved based on the fact that there is a lot of interest in creating these type of mines and supply chains for the electric vehicle and other battery materials. So what we're seeing is debt groups coming to the fore. We're seeing equity groups, large institutions getting involved. But I think we're also seeing, sadly, I think the retail investor not understanding the process. I mean, we have to go back a few years. Let's take a step back and look at 1980 when there were no computers. All of a sudden, computers, Apple and Microsoft started coming on, and by 1990, everyone had one. And I think that's a big, huge change that happened. The same thing happened with internet from 1990 to 2000, smartphones from 2000 to 2010, social media. These are from 2010 to now. What we're seeing, those massive 10-year-long trends, and we're just starting the electric vehicle revolution right now. And I think that's what is interesting to retail investors. You have to get out in front of that wave. We know the institutions are coming. We know the big electric vehicle battery manufacturers and the car manufacturers are going to be turning to electric vehicles. So we need to get out there in front. So that's why I'm here talking to you.
Okay, great. And it looks like you've got some great grades. I mean, we're looking at a map now here of your drill program. And so walk us through this. What is the nature of the deposit, and what's your plan for mining it?
Yeah, so we've got two zones. One is the graphene battery zone, which is already defined into a resource. That's 18 million tons and 3%. And then the refractory zone, which we just drilled, we were specifically looking for higher grade, better economics. And so we drilled into that, and we found a couple holes that were in the 7 and 14% range, but over 100 meters. And that's very significant because they were both very close to each other. So that's the start of our open pit. That creates a better economic argument for the mine. And so what we need to do now is do metallurgy to complete that sphere, graphite characterization, really understand where the particular flake graphite is vis-a-vis the surface, so we can do an extraction program there, and then also look at the tonnage design, so you know how to create the most optimized mine pit that you can, and with the least amount of environmental damage, because of course we feel we are a green company, and so even though we're mining, we have to mine this material. There's no other way to get it. We can do a very good job at minimizing damage to the environment.
So outside of the electric car market and computers, are there additional marketplaces for graphite?
Yeah, there certainly is. The steel market does consume a lot of graphite right now. Electrodes are used in that particular market. There's lubricants, there is brake shoes, gaskets are using material. And then there's also the graphene market, which is very exciting as well, but still in the future. But primarily, it's an additive to other materials, such as aluminum potentially, to make materials stronger. So we find that as industry goes very well, so does the graphite market.
That's fascinating. How much longer until you're ready to go into development of the actual mine itself?
Yeah, that's a good question, because what we want to do is get to the point where we have a metallurgical decision first. Then we want to go to a 43-101. We have 20% left of the property to purchase, and then we want to go back to the preliminary economic assessment, which talks about community relations, infrastructure, power, and the cost and benefit ratio, because we really want to have a strong internal return for that particular mine. And the stronger the economic argument, the more likely we get financed.
Sure. Okay, and finally, Paul, tell me about the most significant risk factors and challenges that you're facing here in observation of the BCSC's recent guidance that if we're going to talk about the positive, we have to also talk about the negative. Where are the threats lying for Lomiko? Yeah,
I think right now we're in a situation where we have to look at financing as the biggest threat to this particular project, because financing opens up a lot of other things. We can get community acceptance because we'll be able to fund some programs for the community. Of course, there's First Nations as well. We have to have agreements in place, but we've had strong, I think, response in the Quebec government because they have signed with the Cree and James Bay. So we think that there's certainly a lot of opportunities there. And this is a job creation situation as well. Other risks include the graphite market itself. Is there going to be that demand? Is there other projects that are going to be online as well? So I think those things that you have to look at, generally speaking, vis-a-vis the North American market supply chain that's going to be created versus the external market. Sure, there's a lot of graphite out there, but is it going to impact our production here in North America? But I think that we can solve some of those issues primarily because we will have, I think, a very economic argument, and that's what you have to do. And that's why I took the step of doing the first 43-101 and saying, guys, this isn't good enough. We're only top 20 in the world. We need to be top 5. And so that's what we stepped up and drilled again and found some really good grades.
Great. All right, Paul, that's an awesome update. We wish you the best of luck. Thanks for joining me today.
Thanks, James.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment.
That's okay.
Hey, and there's our show for this Monday. It was a test. It was only a test. We'll see you on Friday.